In this podcast episode, Ray Dalio, the founder of Bridgewater Associates and a renowned global macro investor who famously foresaw the 2008 financial crash, shares his insights on current economic risks, including the possibility of an AI-driven investment bubble and broader economic and geopolitical challenges. Dalio explores the dynamics of bubbles, technological disruption through AI and robotics, the shifting global order, wealth inequality, political dysfunction, and practical advice for individuals navigating uncertain economic times. Dalio acknowledges the widespread excitement around AI's revolutionary potential, but warns that classic signs of a bubble are present in the market. He explains that a bubble occurs when prices inflate far beyond reasonable valuations due to investor exuberance, often fueled by debt and speculation. Similar to historical bubbles such as the 1929 crash and the 2000 dot-com bubble, AI investments are currently valued at levels that may not be sustainable. When bubbles burst, the effects ripple through the economy, leading to asset sell-offs, reduced spending, job losses, and downturns such as recessions or depressions. Dalio highlights how people's net worth often grows on paper during bubbles, but since wealth must be sold to convert to spendable money, a sudden need to pay debts or taxes can trigger mass selling and a collapse in asset prices. He emphasizes the supply and demand interplay in stock markets, noting that issuing new stock increases supply, which can deflate prices if demand wanes. Interest rate hikes or new taxes can force investors to liquidate holdings to raise cash, pricking the bubble. Dalio observes that many investors in this cycle are weak hands, less informed and highly leveraged participants, exacerbating volatility. The bubble's popping leads to fear, hoarding cash, and economic contraction. He notes that bubbles are a natural part of revolutionary technological advances, but managing their aftermath poses significant systemic challenges. For investors and average individuals, Dalio stresses diversification across asset classes: stocks, bonds, real estate, gold, and alternatives. He warns that cash, while perceived as safe, often loses value over time due to inflation and taxes. Gold serves as a valuable hedge during economic downturns. He recommends maintaining enough savings to cover several months of expenses and balancing risk and return carefully. For those with limited resources, Dalio advises investing in oneself through education and skill development to improve income potential. Understanding one's own nature and adaptability is crucial when facing rapid technological and economic shifts. Dalio discusses the accelerating impact of AI and robotics in replacing both physical and cognitive human labor, marking a new phase in the historical evolution from agricultural to industrial to information economies. He points out that while productivity is increasing, income and wealth concentrates increasingly with capital owners rather than workers. This polarization risks widening wealth gaps and employment challenges, especially for those lacking advanced skills or adaptability. Dalio explains that future work will reward those who integrate AI as a tool and maintain exceptional human talents, intuition, emotion, and creativity. However, the displacement effect of automation on jobs such as driving is already visible and likely to accelerate. Beyond bubbles, Dalio introduces the concept of the big cycle, a roughly 80-year cycle in which debt accumulation, wealth inequality, political polarization, and shifts in global power converge. History shows that extended periods of debt and inequality tend to culminate in economic crises, social unrest, and geopolitical conflict, eventually leading to a reset or the emergence of a new world order. Political dysfunction, exemplified by short-lived governments and lack of bipartisan cooperation, compounds economic difficulties by hampering necessary reforms. Global power is also shifting. China is now the largest trading partner for many countries, exceeding the U.S., signaling a change in world order rarely seen in the past century. Dalio highlights how capitalism inherently creates wealth disparities, with the richest accruing outsized shares of income and assets. This widening gap undermines opportunity and social cohesion, leading to political conflicts and difficulties in funding essential public services such as education. While wealth taxes are debated as a solution to reduce inequality and raise government revenues, Dalio cautions that such measures can depress investment and trigger capital flight unless carefully designed and accompanied by efforts to boost productivity and broad-based education. Societies with strong social support systems and investment in human capital tend to fare better in managing these challenges. Reflecting on historical patterns, Dalio expects the present era to end with a shift in global dominance from one superpower model, as seen since World War II, to a more multipolar world. He views the rise of China as a geopolitical reality and anticipates a regional rather than universal world order, with the US and China likely maintaining significant but regionally focused influence. He foresees ongoing geopolitical tensions such as the Taiwan issue, but doubts these will lead to outright military conflict due to the high costs involved. Instead, economic leverage and diplomatic maneuvers will play larger roles. Discussing the US's protracted involvement in Iran and the broader Middle East, Dalio regards it as a strategic mistake, exposing America's declining ability to project power unilaterally. He sees the U.S. population's war wariness and concerns about economic costs as limiting military engagements abroad. The U.S. inability to maintain unilateral control over critical choke points like the Strait of Hormuz signals a reduction in global hegemony, mirroring the decline of previous empires. Dalio suggests that the U.S.'s diminished presence creates strategic vacuums that China and other powers are eager to fill, reshaping global alliances and influence. Dalio advises younger generations and entrepreneurs to embrace uncertainty about the future by focusing on adaptability, continuous learning, and maximizing the use of emerging tools like AI to enhance productivity. He encourages individuals to find the intersection of their nature and passion while remaining mindful of financial realities. Success is less about intelligence alone and more about adaptability and alignment with one's strengths. For entrepreneurs, Dalio underscores the importance of operating globally and avoiding environments with structural dysfunction or lack of capital and innovation. The UK is presented as a case study in the pitfalls of over-indebtedness, political instability, and declining productivity. Frequent changes in leadership and social discord illustrate the difficulties of governing amid fiscal constraints and growing inequality. Dalio sees the UK's challenges as emblematic of the broader big cycle's stress points, with limited fiscal space and political division undermining effective policy responses. He suggests that recovery will require difficult restructuring, bipartisan cooperation, and rebuilding productive capacity, a challenging prospect given current polarization. Dalio allocates a small portion of his portfolio to Bitcoin, but prefers gold as a more reliable form of hard money that cannot be printed or easily manipulated. He acknowledges Bitcoin's unique attributes, but points to potential risks from emerging technologies like quantum computing and regulatory actions that can undermine it. Central banks favor gold for reserves due to its privacy, lack of counterparty risk, and historical stability, especially during conflict or economic distress. Dalio emphasizes the importance of learning principles underlying economic and social cycles to better anticipate and navigate systemic risks. His framework involves recognizing patterns in debt accumulation, political dynamics, technological change, and global power shifts. By understanding these enduring patterns, rather than focusing solely on short-term events, individuals and policymakers can prepare more effectively for the inevitable periods of turmoil and renewal. His commitment to public education aims to demystify these complex phenomena through accessible explanations and practical applications.